Hey everyone, this episode is a super personal one. We talk about how I became a property multimillionaire with zero debt in 2023 with a property portfolio of $12 million. Now, even saying it sounds super boastful and cringe and cocky and big-headed. Is really not my intention. It's really there to share my honest advice for new investors. So in this episode, I break down exactly how I started investing in Australian property and how I would do it if I was starting in 2023. Like, I'm super humbled to have, a pretty big Australian real estate portfolio. Once again, I'm sharing this from a perspective of, well, at least attempted humility. The idea is to not convince you, but just to share like what's possible, because ultimately, all of these numbers, actually, they mean nothing. Like, in a sense, they mean nothing. And Bushy Martin interviews me in this episode to understand exactly why. I'm so honored to be a guest on his podcast, Get Invested. And this becomes like a spiritual conversation really quickly. Obviously, the more I flex, the more vain I am. So I don't. We talk about the truth. Most property quote-unquote experts don't. I give my most honest advice for every new property investor on how they can achieve what I did, maybe in a different shape or form. Everyone's unique. And most importantly, I think, millionaire or not, I share with Bushy my insights on how property investors can truly become financially happy. So this is like finances intersected and merged and melted with almost like meditation and spirituality and higher thinking. At least that's the attempt. Forgive me if any of this comes across as, a little bit big-headed. That's really not my intention, but I hope it serves you and I hope it brings you so much value. Enjoy, guys. Welcome to the Oz Property Investment Mastery Podcast. My name's PK and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you.
Where I'd always like to kick off is for those who don't know who you are, can you start off by telling us what you do differently and, as importantly, why you do what you do, PK?
Such a good question. What I do differently than, and I assume we're talking in the property context, is, generally speaking, everyone is trying to sell you something, like sort of, I don't know, they're trying to make a quick buck, and it's masked in a lot of things that make sense. The wrapper and the ribbon and the card on the present looks amazing, but when you open it up, it's like, oh, there's a box inside, there's another box, and the actual present's just like tiny little thing. It's not really substantial. So what I do different is I actually just give the contents of the box first, and I let the people wrap it themselves. And what I mean by that is I'm so big on education. I know you are, Bushy, as well, with this podcast and other places as well. But yeah, I don't know if it can be my claim to fame, but there's literally more than 600 videos on YouTube, hundreds of podcast episodes, a community on Facebook with over 30,000 people. I just love educating. And if people vibe with me, then I help, because they already learned so much for free. So that's kind of like my point of difference and why I do what I do. I mean, we could write a novel in this, and I don't profess to be like someone that you should look up to or anything like that. But property for me has changed my life. It's I can talk about it emotionally if you want me to, but it literally has changed the course of the life of myself and my wife. And like my son, he's 4 years old. The opportunities that he's going to have in life because of what property has done for us are the opportunities that I never had when I was 4 years old. Okay, so like for me, I'm always so grateful to property. And as corny as it cheesy as it sounds, and of course, nothing is a charity. So it's like, okay, why not just give everything for free? Nothing's a charity, but I try to do my bit in terms of just giving so much free education so that people can do it themselves. Okay, by themselves, for themselves. And if they need help, they can reach out. But absolutely, I love it when people do it for themselves, by themselves, even without my formal help.
Yeah, I love it, and that's such a great way to get the message out there because it's going to be sustainable. And I will circle back on the emotional part of how property's helped you because I think that will be really important to share. And as part of that, I guess, PK, what I'd love you to do is take us on a bit of a run through your journey to date and focus on what you've invested your time, your energy, and your money in over the years and why. And how's this led you to where you are and what you're doing now?
Sure. Probably, I don't know if it's sensible to start in high school, but I'll just briefly start there because I am a second generation immigrant. Well, actually, I was born in India, but we moved to New Zealand when I was 4, so it's kind of in the middle. We didn't have a lot, growing up, and the reason is that when people migrate from overseas, especially in the 90s, you're not actually allowed to bring much money into the country that you're migrating to. So even though you might be really qualified in your country of origin, you have to start life fresh. And for me, it was literally like nothing. My mum was a machinist. She sewed curtains. And, my dad also, he was an engineer and he had to re-engineer his career just to get by in New Zealand where we grew up. I remember in high school, because I didn't want to live the life again that I had during primary school, I started Googling when everyone else was like going out and playing touch football or whatever it is. I was Googling, best salary jobs. Because for me, it was always in the mind that I have to get ahead. To get money means to be happy. That, at least at that time, that was my concept. That was my philosophy. And
Yeah.
so what came up was investment banking. What came up was investment banking, not doctors, not dentists, not accountants, but investment bankers. Google told me when I was 13, got you a 6-figure salary straight out of university. So I was like, well, that's my ticket, right? I'm good at math. I can do this. That was my ticket. And I literally, Moshe, I kid you not, I busted my ass throughout high school. I played sport and everything as well, but my focus was so clinical. I must become an investment banker. It was a very vain thing in hindsight. And I did, went to UQ in Brisbane. I did my finance degree and everything. And I got my first job at JP Morgan trading stocks in the oil and gas sector, doing equities research. And I was making good money unapologetically, 6 figures out of university, the exact goal that I had when I was 13. But, and the reason I say all of this is that like it just did not fulfill the expectations that I had from it. It paid well, but my life was really miserable because we're working 90-hour weeks. And like, yes, I could buy anything and it could flaunt my ego because I was able to afford things that my friends and family couldn't. But honestly, I had no time to even utilize that. And then I was like, okay, well, this isn't it. This isn't it. Like, this was a massive fake out. What's next? And I was like, okay, well, I know how to trade stocks. Why don't I just try to achieve financial independence through the whole equities, through the money markets, through the commodity markets, through stock investing? And I very, very quickly realized that to get anywhere in the stock market, you need to have a big lump sum to start. Because let's be honest, if I have 20 grand in the bank and I make even 50% on it, which is like highly unrepeatable, but that's only $10,000, right? So if you do
Yeah.
that for like 30, 40, 50 years, the whole Warren Buffett way, of course, it's a no-brainer, but I don't want to wait 40 years. I don't want to wait 50 years. I wanted to like leave the 9 to 5, so to speak, quickly. And so like what works in Australia, apparently property, right? That was what everyone told me. That's what I was reading on the news. That's what was on TV. All these property people, everyday people. And I was like, this doesn't sound right. This is like, if it was that easy, then how come everyone's not driving around in a Lamborghini and stuff? So I did all the seminars and stuff, Bushy, where they get you to the back of the room and try to flog you an amazing deal for a limited time and all that. And they were talking about things like, oh, you have to buy close to a CBD, and that's where the best growth is. You need to be, in blue chip areas. You need to utilize negative gearing. You need to be close to the ocean. All of these myths. And I was like, okay, this this appears to be good, but let me not just outsource the thinking to someone else, but let me think about it objectively myself. And because I had a statistical background, I was working in banking, I actually got 20, 30 years of property data and I regressed it to, what has growth in these suburbs actually done? And you
Wow.
very quickly find that Sydney performs no better than a place like Launceston over 30 years. You quickly find out that a place like Vaucluse, premium suburbs, perform no better than like a Parramatta, like a house, like a landed house in Parramatta over 30 years. You find out that proximity to the ocean, that even things like train stations don't actually have any statistical correlation with growth. So I was like, that guy or that gal on the stage in that fancy hotel with the suit, and the Mercedes and the PowerPoint projector, I was like, they're actually not telling the truth, right? And that was the aha moment for me. And I was like, I can't trust anyone. I can't trust people like myself in 2023, right? Like I can't trust anyone who's trying to sell me anything. But what I can trust is that property is the vehicle for me to achieve my exit from 9 to 5,
Yeah.
because I've seen people do it.
Let me drill right in there then, because what I'm hearing is you are clearly having some reservations around the sort of myths that are being perpetrated by the industry. And you've done the data research, which is starting to say, well, all of these areas that everyone raves about aren't all that flash. What helped you overcome those probably initial concerns to continue on that property journey? Because a lot of people would have gone, this is all bollocks. I'll give this away and do something else.
Well, like unfortunately, I don't think there was so many podcasts, or I don't think YouTube was a big thing back then. Like there was no role models. Like I don't know about you back then, Bushy. Like there was no one in the kind of media that you could look up to necessarily, who was objective without them trying to sell you something. So what really inspired me to keep going and actually do it was actually just action. So it's not like I went out and had this idea of 10 properties in 10 years or whatever thing that people say these days. But I was like, let me just at least buy one, right? And let me be reasonable about it. So I bought one in New South Wales, and that was from Sydney. I was living in Sydney at the time, and I was like, that was in East Gosford, and I was thinking like, let me not go down the negative geared path. Let me buy something that's positively geared. Let me use my own data insights that I gained myself, and let's see if it works. Like if it doesn't work, for a 300K property, all right, like I've just wasted a deposit of $40,000. Okay. And it's not going to like crash or anything. So, and it worked. And so that was my biggest driver. It actually worked.
Let's define what work means, because what works means different things to different people. What was your initial investment strategy in property at that time? And when you say it worked, what does work mean?
So my strategy was that I really this is so embarrassing, and you're gonna hate me for it because I know that you espouse the opposite. I honestly didn't have a strategy, Bushy. I'm sorry to say. Like that was probably a mistake, a huge mistake. Like I said just before, it was just this concept of, let me just see if this first one works or not. This first property, and so what does worked mean? It paid for itself. Okay, so like before jumping in and buying an asset worth $300,000, I think it was 320,000. It was like, okay, I want it to pay for itself. I don't want to buy a property, or let's say a property business, which is what it is really, that I
Yeah.
have to contribute every year. So it was self-sustaining. So I was like, okay, from a cash flow perspective, if I lose my high pressure job, I don't have to sell that thing. And it was valued, like when I bought it, I got it for 320, and like just within a few months, this isn't amazing numbers, right? But it was valued at 340. So I was like, oh, that's $20,000 gain in 3 months. I was like, all right, that's going up. But then it's like, for you or for people who are listening, that they're probably like, well, that's kind of negligible growth. But 20 grand on a deposit of about 30 to 40 is like a 50% return on investment in 3 months. And I compare that to what we were achieving for clients at JP Morgan. And it was, I mean, it was nowhere near. It's like if you can get 4 or 5%, it's on a stock, it's like you've done well. So I was like, this is some on a cash on cash basis, this is taking care of itself and it's going up in value. That's what
Yeah,
worked.
brilliant, great. So it's not costing you anything; it's looking after itself. And you probably heard me say before that I believe property is a long-term journey. So for 30 grand down and using the bank to fund the rest, you're getting an uplift of 20 grand in a matter of months. That's a sensational result. So I can see why you'd be going, well, this sounds awesome. Where did that lead you to then? So that property starting to perform well. What happened from there?
So then I started to get excited, right? Because you kind of catch the property bug. Like in anything in life, when you're sort of onto something, even if it's like when you start playing tennis and your forehands start consistently going in, you feel rejuvenated, you feel a little bit exhilarated. By the way, mine don't consistently go in, but it was like there's something in this whole property thing. And so then we moved back to Brisbane. I got a different job, something a little bit less high pressure. And I continued. So I was like, this formula worked. I tried to refine it a little bit. So I added more data factors that I was looking at, and it pointed me towards this infamous suburb in Melbourne or Greater Melbourne called Frankston. And this was in 2012, right? And so what was next was like, okay, I had never like been to Frankston, but by calling local property managers, much I'd done for in Gosford, they did all the inspections for me. They told me the best and worst parts of Frankston. Maybe it's good that I didn't go to Frankston at the time because maybe I wouldn't have invested. But once again, I bought for 315. It was valued at 340 after a few months. So on a cash on cash basis, like that's pretty good. The rent was 310, so it was kind of paying for itself. So I was like, oh damn, like this is now we're starting to repeat this, right? And then all of a sudden I was starting to formula strategy. I was like, how many of these can I buy? Then how long do I have to wait for them to like marinate in their equity, go up, and then in the future I can sell some and live off the rest? Of course, borrowing was much easier back then, let's be honest. It's not quite like that anymore, but that was where the strategy started to form in my mind.
Yeah, I love it. So where did that lead you to? And what I'd love for you to share with us as you continue on this journey is how your strategy started to evolve and change as your knowledge increased and your experience increased. And what were some of the highs and lows that you experienced? Because as we all know, it's particularly the challenges that we get the most learnings out of. Can you take us through some of that?
Yeah, for sure. So I did one more property before I started to have some failure. The next one was Kingston in Tassie, same sort of numbers, same sort of result. And then I started to get a bit of a big head, started to tell lots of family and friends about it, like puff up my chest. And then I remember at that time, now we're talking like 2015. So I'd had 3 properties by then. And there was now like Sydney was in the middle of a boom, and like there was lots of buyers agents popping up from left, right, center, and everyone was talking about Cairns and how there was this big Hong Kong magnate that was buying a casino in Cairns, and about how it was going to boom, big infrastructure. I think like agricultural economy was booming. There was like literally billions of infrastructure spend, capex going on in Cairns, and I was like, you know what? Like these experts know way more than me. I've done well, but I like credit to where credit is due. I got to listen to these experts. I bought a property in Cairns, and that was the single biggest mistake of my buy and hold career because, like, it literally. What did I buy it for? I think I bought it for around 400,000, and save and except the last 2 years, like a COVID-induced boom, you could say in Cairns, it was literally flat, and it was costing me not so much, maybe like $1,000, $2,000 a year. So I was, that was the biggest failure. And of course, it didn't send me bankrupt or anything like that. But for me, the learning or the failure is always 2 things. From a practical perspective, always rely on data, like microeconomic data, to the LGA that you're focused on, to the suburb that you're focused on, more so than emotive news article stories about big capex spend, about big, like the headline, the cans to boom, this and that. Just kind of like forget all of that and focus on the data. That's the mistake I did. I forgot about how I had made money to date. And I just kind of got carried away. I made a long-term decision based on a short-term emotion. And yeah, that's probably not the best way to live life. And the second challenge or learning for myself, because I still planning to learn, I still have plenty to learn, is more from a psychological perspective. Like no one really cares about your money as much as you do. So even though at that time podcasts were becoming really really famous, like property podcasts, what I almost did was listen to hundreds of them and see what the intersect was of what most experts were talking about. I'm like, okay, on the outliers, experts might be wrong, but everyone's talking about this, everyone's talking about that. Therefore, I must invest that way, and I must invest there. And honestly, they don't even know that I made a mistake, right? They don't care about me as much as I care about myself. And I can honestly say that as well. Like, even though I produce YouTube videos to my audience, the audience cares about themselves more than even I care about them. That is the kind of principle that I learned from that fairly big blunder. The opportunity cost of that was immense, because I could have invested somewhere like in Sydney and rode the next 2 years of the boom.
Interesting. So yeah, that's really good. So your knowledge is increasing, your ego is starting to deflate a little bit, which is often blinds us to what's really going on. You're starting to ignore the politics as like property politics, because there's a lot of puffery that goes on around what's going to happen, but until it's actually committed, doesn't mean a thing. Where was your vision starting to head then in relation to your ongoing strategy? Can you take us from there?
I kind of got to the conclusion from that point, Bushy, that even though I had a lofty goal, to retire by an X number of years on X income, as we all do, that it's not that I will rise to the level of my goals. Goals are important. Goals are potent, especially if you write them down. But I wasn't automatically going to rise to the level of my goals, but rather I was going to fall to the level of the systems that I had around myself. And so it's great to kind of go and dream, but I mean, a dream is just a dream unless you have a system to get there. So I kind of fell back, for want of a better word, to the systems that got me my first 3 properties that were still doing well. And I just refined that further and further, now with I suppose, like you put it, more of a modest or humble outlook, because I'd failed, right? Like, it wasn't a foolproof thing in property investing. It's definitely not. And so my next steps were to just rinse and repeat that. And then I kind of thought, let me get into development a little bit. Can I speed this up? Do I really want to wait 20 years before I start working? I was a little bit greedy in that sense, I guess. Can development fast track that? And so I got into a little bit of development. It made money, but once again, like, let's be honest, development wasn't the pot at the end of the rainbow either. And I'll very quickly take you through some numbers. So, like, we did a project in Coorparoo in Brisbane. It was a corner block with a granny flat at the back, old house. We renovated the house, subdivided it, lifted the granny flat, chucked it away, or we sold it actually for 50,000, and built 2 townhouses at the back. When a property expert comes on and tells you about a project like that, everyone's just like salivating. They're like, oh man, that there must have been like so much money in that, like, you're so intelligent, this and that. But honestly, that ran over by more than a year than what it should. It cost more than $100,000 more than what we had expected. We made about $200,000 to $300,000, but it took 3 years. So on the face of it, it's like, oh man, you did development, you're accelerating your property journey. But it was like, it was a lot of effort, a lot of sleepless nights, a lot of headache it was profitable, but was it really worth it? I'd probably say just, you know what I mean?
Yeah, I know exactly what you're saying. The allure of the and the mystique and the prestige around I'm a property developer sounds really good, but when you run the numbers and those holding costs that you talked about, and then if there's any overruns there, and then the taxman coming in to chunk into the capital gains exercise over a short period of time is a bit of a, for many, an unforeseen exercise. So what did you take away from that first property development experience, and did you continue with that, or where did that lead you to?
Yeah, I was involved in a couple of more after that, but it wasn't, I changed my mindset to away from that is the panacea, to fast tracking my way to retirement, to that's another ingredient in the recipe to getting to my goal of retiring early. You know, it's almost like we're always looking for that perfect strategy, that perfect tactic, or that perfect project, or it doesn't exist. Like nothing can replace hard work, you know, nothing can replace. And that was kind of my aha moment, my realization again. So I was like, okay, we can do a few projects on the side, but let's stick to the bread and butter. There's no get rich quick. I'm not going to leave my 9 to 5 as much as I'd love to, anytime soon. I just got to, build the wall. I got to build the bricks. I got to build the foundation. I got to just build this up slowly and steadily. And honestly, like that's the truth. I'd love to say, I figured out this amazing method of like this and that, and you should follow me, and like it didn't exist. Right? It was like, it was a lot of, it was a lot of naivete. It was a lot of vanity. And in hindsight, I'm glad I went down it, but property investing takes time, takes effort. It's worth it, but there's no short-term results.
Yeah, I 100% agree. And I think, and this just doesn't revolve around property, but I think we now live in a world of total impatience. I mean, we live on our iPhones, so we've got instant everything. And the downside of that is that rather than embrace time as our friend and then allow time to do its work, we're in such a gut-busting hurry to make it happen yesterday that we don't see the wood for the trees. And if we just embrace it as a friend and then do the right things and then get out of the way and let time do its work, then we're actually going to enjoy the journey much better, because our expectations are set around a bigger result at a point of time. What are your thoughts around that?
I think the journey is, I don't want to come across as like boastful or anything, but now that I've been on the other side of the fence, I can tell you the grass is not greener. Like I've surmounted the fence, I've climbed over the fence, and the neighbor's grass is not any greener. I'm no happier than what I was before. So I think the point is the journey. Like the journey is what's important. I'll just tell you a really quick story that I heard recently. I don't know if it's like totally relevant, but it kind of sticks in my mind. And it sort of goes that there was this prince who was going to become king. This was in the East somewhere. I don't know if it's a true story, maybe, but this prince was going to become king. And in order to become king, first of all, he had to go to his guru or to his teacher to learn a thing or two, so that he'd be seen to be fit to rule the kingdom. And so the teacher said to this prince, this young prince, he said, "Go to the jungle, go to the forest, and just sit there and tell me what you hear. Okay, tell me what you hear." And so he went to this forest and he stayed there for like 3-4 hours, and he sort of, okay. And he came back to his teacher and he said, I heard some birds, I heard like some animals kind of ruffling around. There was like an owl at night that I kind of heard the voice of, that kind of thing. And the teacher just looked at him and said, "No, not at all. Go back to the forest, to the jungle, and this time don't come back until you tell me what you really hear." Okay, so don't come back until you can resolve this. So the prince was like, okay, let me go back to the forest. And he sat there and he sat there and he sat there, and nothing was coming to him. We could just hear the same old, like rufflings and rustlings of the jungle environment. And he was like, well, I can't go back, and I'm getting really, really hungry and like, hangry or whatever. I got to resolve this. So then he really went into a more meditative state. He really started to soak himself in the atmosphere, and he all of a sudden he kind of tapped into this space where he could almost hear the sun warm the earth. He could almost hear like the grass drink up the mountain dew. He could, like the finer, the more subtle things like the flowers opening in bloom. And so when he came back to his teacher, the teacher asked, "What did you hear this time?" And he said these more subtle, these more refined things, like who can hear the sun warming the earth? But that's what he was hearing. And the king said, "Yes, like now you are," the teacher said, "Yes, now you are ready to be king." It's because now you can appreciate the journey, you can appreciate the empathy required to love others and to love yourself. And so I don't know if like a completely like parallel story or relevant, but for me, my realization was that if we're not meditative or introspective or just present in the journey of wealth creation, if we're always living in the future for when we achieve that outcome, when we get to the future, we won't be in the present to enjoy it. We'll still be in the future trying to achieve something else. And so we'll never be at a point in which we're actually enjoying. Right. And so that's kind of been a big takeaway for me anyway.
It's great. I love that story, and you tell it very well. By the way, PK, there's a bunch of messages in what you've just shared with us right there, and it's one that is very relevant to what we're talking about, because we're all in such an impatient hurry to get to somewhere that we're missing everything on the way through. And that patience and being able to really listen and really allow time to do its work is a really big miss. That delayed gratification aspect is been pretty much wiped out of most people's memory banks to a fair degree. And for those who realize it, accept it, and then run with it and go with the flow of that, life's enjoyable at all stages of the exercise. So I really appreciate you sharing that. Mate, just while we're talking about it, you mentioned that you climbed the fence. I'd love for you to share, what was the fence for you in terms of, at what point did you go, right, I'm now financially free? And how did your thinking and outlook change at that point in time? Can you share that with us?
Sure. Let me try my best. So it was kind of at a point where we had reached $120,000 of passive income. Like I said to you at the start, we didn't really have like a strategy when I first started, but we're pretty modest people, and so like 120 was enough. And I should also say, like, we got there in around 10 years time, and the reason we got there is we were on high income. So it's not like anyone and everyone can just take my story and be like, I can replicate it. We were very, very grateful, very, very fortunate, and we worked very hard. My wife was a chartered accountant at KPMG. I worked at JP Morgan investment banking, management consulting, and at Virgin as well as the head of strategy. So it's because of that high serviceability that we got to our outcome so soon. Like, that's a really important point to make so that people don't misunderstand. But that was the fence. It was that 120K. And that, when we got there, it was like a big like sigh, like, now, even if I lose my job, because it's always kind of at the back of it, these days, especially, is frictional unemployment so much. Now, even if I don't earn a single more dollar active income in my life, at least I can get by. Yes, inflation will mean that I probably need more in the future, but I can get by. And that was just a relief. It wasn't about a car. It wasn't about a big house. It wasn't, because we didn't have any of that, let's be honest. It was just about steady income. Like that was all it was about. And my mindset, having reached that, which was just a lofty goal at the start, having reached that really opened my mind to what was possible. And so there's this quote, I don't know whose quote this is, but it goes that millionaires don't believe in magic, but billionaires do. All right. And I don't think you're meant to take it literally, but the whole point is that when you reach, you make $1 billion, you're like, Bushy, anything is possible. Like, if I can make $1 billion, like, anything, damn thing is possible in this world. And obviously, we were just on 120K passive, not like billions or anything, but it was that similar mindset. It was like, I was telling my wife, I was like, like, actually, we can do anything. Like, it's not that we have $1 million in the bank and a war chest to do anything, but it's just a mindset. If we really put our effort and our mind and talent and skills, we can actually achieve more than what we thought we can achieve. And that's probably something that I'm still working on. It's not like that mindset is just permanently fixed in my head and I'm just this amazing motivated person. I'm constantly like having to remind myself of it. But that's a really good lesson that for people who are kind of watching or listening and are like, I don't know if I can achieve my property goals. Like you can, like you really can, as long as they're realistic and as long as you give yourself enough time.
I love that. And what I also love about what you've just shared is, the question that I think people need to ask themselves is how much is enough for you to live the way you want to live? And for most people, 120 grand a year, without any pressure, and more importantly, having the time then to put into things that are really going to give you fulfillment, that's a great place to be, mate. There's a sense of, I don't know about you, but you mentioned the word relief, just the sense of being able to do what I want to do when I want to do it without having to do it. That your whole outlook on life changes, and what I'd love for you to share now is a bridge into that, because as I talked about earlier in the intro, for me, true fulfillment comes from giving freely to others. So, talking to you and the podcast and all the work I do, I get immense satisfaction out of doing that. What tipped you into the education space? So you've got yourself in a position where your income needs are being met. You've been able to spend time with your great wife and your family, which is, again, a lot of people miss out on that because they're so hell bent on chasing the dollar that's gone before they even know it. What sort of got you thinking, well, perhaps I need to start sharing this and opening people's eyes and ears to the opportunity that property has given me?
Yeah. For me, it was like almost like a sense of gratitude. It's kind of weird to say because property isn't a sentient being, but like a sense of gratefulness to Australian property. So I was like, this has genuinely become my passion, because how can it not? If you get to your goal and it gives you that sense of relief, it becomes your passion, whether you like it or not. And so I was like, but how can I best help people? And like I said at the start, like I'm not some sort of saint or anything like that. But I was like, when I first started, there was so many people out there to just empty my pockets, and I saw through them using. I mean, I was lucky. I kind of did the data analysis and I saw through it, and I sort of came to this realization, and then I've been kind of marinating in it in my mind lately as well, is in the world, 10% of people think, 20% of people think they think, and then the balance, 70% of people rather die than think, right? So I was like, these 70% of people, they rather die, that they're not really property investors. Like they're not kind of built for maybe this game. But it's the 20% of people who are like innocent. They're thinking because they're trying to follow the experts, quote unquote. They're trying to read these books. They're trying to consume this content. They're thinking they're doing the right thing, but actually they're just they're consuming recycled garbage, because a lot of these professionals, quote unquote, they themselves haven't achieved what they're professing. They haven't tested their theories. They're just trying to sell you like a course or a program or a buyer's agency service or some, flash off the plan apartment, house and land package. So my kind of passion became to help people who I was when I started, that 20%. The people who know how to think, like they're all good. Like they don't need me, right? They don't need anyone. They already know how to think. They already know how to see the forest from the trees. For example, yourself, we were talking about that before we hit record. But those 20% of people, unfortunately, they're the ones that get taken for a ride. They're the ones who their dreams are elevated to unrealistic proportions, and then the reality isn't quite that, and they just get disappointed because of spruikers and this and that, and even well-meaning property professionals who aren't really out there to hurt anyone, but they just I really don't want to come across as arrogant, but they're just not competent at what they're doing, right? And so it's this concept of teaching those who think they're thinking but actually are just following sheep.
Yeah, really good point there. And it's, I think as you say, the disappointing outcome of a lot of that, if they've had a bad experience It's like wash their hands, walk away, never do it again, and miss out on the immense opportunity that property is going to give them if they just stay the course, learn from it, dust themselves off and go, right, I'm not going to do that again. But let's keep refining this. It's a bit like learning to walk. If we gave up the first time we tried to stand up and decided to stay in nappies and crawl for the rest of our lives, it's no different when we put it in a property context. But for so many who have a bad experience early that jaundices them to the point where we're going, well, that's it, I'm out. I love that you're now sharing information that's going to enable those people to go, okay, well, this isn't working, but there's a reason this is not working. Now I understand what it is. Now I can correct my action and do it differently going forward and still achieve the goals that they have longer term. So love that. Before we sort of dive in full depth into more of what you do, I'd love for you to share, and this doesn't have to be a property exercise, but what's been your biggest challenge in life so far, and what learnings and changes have come out of that?
It's a really easy one to answer. And the biggest challenge or thing that I have struggled with, or I still struggle with, is expectations. I have this kind of formula that I'm trying to brand in my head, and it goes that happiness is reality minus expectation. Happiness is reality minus expectation. And whether it's in the property space or just wealth space or relationships or, objects of the sense. So like, I'll give you an example. Like, I love cars. Like, I don't like expensive cars necessarily, but I like cars that feel good, that drive well. Like, I'm a big Italian car guy. Right. So like, like Alfa Romeos, etc. So when I got my first Alfa Romeo, I was kind of saved so much up to get it, and I built this whole thing up in my mind. I'm going to be so happy when I get it. And when I got it, it was like I was happy for a while, but then that amazing car, for me, it was a Giulietta. It wasn't terribly expensive, a 2013 Giulietta. That happiness didn't last very long. And so for me, it was like, what happiness truly was the idea of being happy when I got that car, rather than the actual relationship between that matter, that car, and myself over the long term. And so I thought that was like a massive fake out. And so it was like, happiness is actually just reality minus expectation. I still love alphas, but the whole concept is, don't live your life, like grinding and hustling just to achieve a material object. Because when you get there, and I've got there in so many instances, that happiness, that joy, that satisfaction is so fleeting. It's almost not even worth it. What's more important, like we've already discussed, is the journey to getting there. And then the kind of, it's more the people, the relationships that you have with people, and not even the expectations from them. It's just being with nice people that are in that same frequency, that same vibe as you. So that's kind of something that even though I'm coming across as someone who's, talking, hopefully not smack, but something like learned, like I'm still struggling with this on a daily basis myself. And yeah, just trying to remove expectations from my life, whether that's money or elsewhere.
Yeah, I love it. That quote is one that I stumbled across it years ago, and I think I've whacked it up on my Insta page a long time ago, because I 100% agree with that. It's the expectations that get in the way of enjoyment of anything. So realistic, and you're not expecting things that by putting expectations on anything, we're potentially setting ourselves up to fail. So. Yeah. I love that share, mate. That's awesome. I now want to jump into the future, because you're probably doing this already in terms of what I like to call living by design. Can you paint us a picture of what your ideal lifestyle and your life vision looks like? Now, you might be doing that right here, right now, but I'd love for you to expand on it a bit if you can.
Yeah, sure. It's a bit like what you said. I'm trying to live in the present and my ideal lifestyle. I'm really, really grateful, and this is what I've worked so hard for. I normally spend the mornings with my son, up until about 12 o'clock. He's 4 years old, so we go little kickers, which is like a football thing, tennis, gymnastics, so many different activities. And that's really like for me, these days kids become teenagers probably by the time they're 8. So I was like, let me just like have the most valuable time with him while he's young, so that when he does go through those experiences, he's like, my dad was there, he spent time with me, he loves me, and they'll always come around. So like for me, that's the most important thing in my life. And the other thing is just always being connected with my wife. Like, we worked really hard to get to where we are. It's been a joint effort, not only practically, but we also used her serviceability a ton. And she's just been such a support. So yeah, I really just like to spend my days mostly in the morning with my son, and then the rest of the day with my wife, with a few hours sprinkled in the middle for work. That's my lifestyle. We live here on the Gold Coast, and never thought we would. But yeah, next to the water, and I'm just counting my blessings.
Love it. Is there anything unfulfilled in that lifestyle that you are still striving to achieve that you'd like to share?
I think it's all in the mind. I think it's all in the mind because once again, I know this is a property podcast, and I don't want to go too philosophical on you, Bushy, but some of the happiest people in the world are those who have nothing at all, and some of the most unhappiest people in the world are those who have everything, seemingly, in the world. So for me, and I don't want to come across as a try hard saint or anything, but I'm literally just trying to go internal, to improve my mindset, to improve my heart set, if I can use that term, and really have a more organic, nourishing, fulfilling, and authentic view of the world, because obviously the world is a reflection of your own consciousness. If I can improve my own consciousness in the way that I try to tackle greed, in the way that I try to help others, in the way that I try to limit my own arrogance and try to lift other people up instead of myself, then I know I'll be happier. So I'm trying to do that.
Love it, love it. I worked in New Guinea many years ago, where PK, and there was I was working way up on the remote coast, the northeast coast of New Guinea, and there was myself and a Kiwi. We were doing designing and building a wilderness safari lodge. And I'll never forget one of the locals and one of the elders in that village where we were. He was a fisherman, and he pulled me up one day and he said, I wasn't called Bushy, I was Bushy Junior, but everyone knew me as John, which is my Christian name. And he said, John, I don't understand you white fellas. You spend all of your week busting your guts to do for maybe 1, possibly 2 days a week what I get to do every day of my life. And it's like, that really stuck with me. I mean, that was a long time ago when he said that. And I was like, you are absolutely right. And we've sort of got it all twisted around the wrong way. But mate, if I had a look, if you were to start out again, would you invest in anything differently?
Such a good question. I mean, I didn't. It's not like I just picked the perfect path or anything at all. As cheesy as this may sound, I think I would invest more in connecting with people who have done what I wanted to do, and put myself outside of my comfort zone to do that. And I don't mean like a property guru or a mentor that I pay $100,000 a year or anything like that, but rather just like an everyday person who's, has a family, has achieved, maybe they're 40, 50, 60, whatever that is, they've achieved what I want to achieve, to like just pick their brains more. Because if I had done that, then I could have fast tracked, I could have expedited some of the mistakes that I'd done, or even if I didn't make huge mistakes, just like just optimize the way that I live life, from a property perspective, but also otherwise. So yeah, I think I would invest more in just making a concerted effort to be less shy and just reach out to people who I admire and strike conversations. Even if they just reject me, it's like, okay, we'll just go to the next person. I think, people with experience can teach us stuff that we can't learn in any book or course or anything like that.
Great suggestions there, mate. And that's something that everyone needs to take on. And what's the worst someone's going to say? No.
Exactly.
It's not life ending, as you say. It's like dust yourself off. Let's just keep asking. No, absolutely. And there's so much wisdom in this world, because we live in a civilization now that almost turns our back on the elderly. particularly in the Western world, which is very sad, I think, because the wealth of life wisdom that they carry with them that we are missing out on, and almost if you're too old, you're past it. Whereas we reversed that and thought, well, they've lived what we've done. We can shortcut this process and draw on their wisdom to avoid some of the mistakes that I'm probably about to make. What a better world it will be. So again, I don't want to get off on too much of a tangent either, but I'm continuously disappointed by the fact that we don't respect our elders enough and draw on their wisdom to help our own journey. So I love that. It's probably a good segue here because I now want to sort of dive a bit deeper back into the property subject. And given that you help and talk to a lot of people on the journey, I'd love for you to share what are some of the major mistakes that you see investors making or potential investors making.
I think it comes back to that whole concept of 10% of people actually think and 20% of people think they think. So like I've been very fortunate to have, work with like thousands of investors now, and I consistently see that in their portfolios, because I have privy to their portfolios, they're consistently seeing bad property purchases. It might be hugely negatively geared, not anticipating rate rises. It might be just languishing in terms of growth. It might be in a mining town. It might be unnecessarily negatively geared to try save tax. And the thing is, it's not that they've like made these decisions themselves. It's these properties, these dud properties, for what have you. It's been made for them by property investment professionals. It's been made for them by either like a course guru, much like myself, or like a buyer's agent, or even people even worse than buyer's agents who are getting kickbacks from developers for selling you a brand new stock, and it all sounds great, and it's all about retiring in 7 years with a depreciation and living off the equity. And that was like genuinely my surprise. It's like these mistakes haven't been because they didn't know anything and they just bought in their backyard. It's not been because they listened to a friend, although that stuff exists, but it's like the mistakes are because they went with the wrong property professional. There's lots of good ones out there as well, don't get me wrong, and you have plenty on your show, but I don't know if this is a fair statement, but in my experience, having looked at these thousands of portfolios, I literally know every buyer's agent and where they're buying at any time. Most of them, more than 50%, really don't know what they're doing.
Yeah, I'm going to come back to that in a minute because I think it's something that we really do need to dive into. On the flip side of the mistakes, then, given your own experience and what you've seen in others so far, what do you believe are the actual keys to successful investment and why?
I think the key to any successful investment is to know it inside out. So whether it's let's say a strategy, okay, so you've got a spectrum of very passive buy and hold, I'm just going to set and forget, all the way on the other side of the spectrum to like active commercial developments or renovations or flipping or anything in the middle with rooming houses, DHA property, NDIS property, like there's a million different strategies. Regardless of what it is, you should know it inside out. Okay. And that's the secret to success. You should, if you even have a glimmer of doubt about a strategy or what to speak of suburb or what to speak of the property that you're going to buy in that suburb, then please, please, please don't be shy to either ask the professional who's selling it to you or get enough educated so you can make that decision yourself. If you even have a glimmer of hope, and set aside, when you're, especially the first property, Bushy, there's so much like effort that's gone into it. You've bigged it up so much that by the end of it, you're like, even if it's not great, I just want to do it because I just want to be done with it, right? I just want to have at least one under my belt, and then I'll start taking things more seriously. That's just the biggest mistake. Don't let your emotions get the better of you. If you need to say no to 20 properties before you get that final one, say no to 20. Say no to, if the buyer's agent is saying, mate, Bushy, we've already presented you 20 properties, like you're taking the piss. So I don't care. Like I'm not going to buy it until I'm completely convinced and it's the right one.
Yeah, absolutely brilliant. Having the guts to say no and not allow your own impatience to get in the way of a good decision is absolutely spot on, because the one thing that you and I know is that there is thousands of property opportunities out there, and it's changing every day. So if you say no to one, that's not like there ain't going to be any more. So I love that. You've touched on this a number of times during our conversation. That is the importance of a data-led approach. Can you tell us a bit more about your own unique data-led approach to property? Because I think again, there's data and then there's data. A lot of people bury potential investors with data that doesn't make any difference. Actually, in fact, it could take them in the wrong direction. Can you sort of expand on that a bit for us?
Yeah, sure. So like the way that I've understood it for myself, at least, is that there's different layers, but to simplify it, there's macroeconomic data and then there's microeconomic data. Macroeconomic data, it's very hard to predict anything, right? You can say that inflation rises and therefore interest rates rise and property markets fall. That's kind of logical, but if you look at the history of property in Australia, there's no correlation between interest rates and property. What to speak of unemployment, there's so many instances of places with 10% unemployment doubling in the next 5 years. So when you take what the media talks about, these clickbaity things, it just confuses you. You're like a rag doll, you're just getting pushed around everywhere. So what I try to be an expert in is microeconomic data down to the LGA, what we call SA3 to use an ABS term, or ultimately suburb level. And this is where you can actually start drawing more concrete and conclusive inferences between historical and forward-looking data and predictive capital growth. For example, a really simple statistic like stock on market. Stock on market suggests that in a suburb, of all the properties, how many in terms of percentage are for sale? Now, of course, supply is the enemy of growth. We want supply to be low. Okay, so there's one thing that correlates with capital growth, but not by itself. And this is the mistake that they're like, okay, I know one or two stats. It's like, okay, now I can go find a place to invest in. You actually need to have enough checks and balances, 10, 20, 30 data factors, be clinical, be specific, be serious. And if all of them are pointing in the right direction, so some others are a days on market. You don't need to pay for a course to just figure out what the days on market. If it's taking 4 months to sell a property, chances are like demand isn't strong, right? Chances are capital growth isn't about to occur. But if it had been taking 4 months and now it's taking 2 months and it's likely to take just 1 month, now you're onto something. Now you're onto a trend. Then you compare it to something like building approvals. Okay, stock on market is low, supply is low. What about that future pipeline of building approvals in that suburb or around that suburb? If that's huge, then the current growth that suburb is experiencing is going to dissipate very quickly. But if there's no pipeline for any more developer activity, then that current pressure in the environment, in that market, that environment is going to last. So there's so many things you can ascertain that with both macro and micro, but really in my experience, to geek out for a second, the statistical correlation using a multilinear methodology is more statistically reliable at a microeconomic level.
100% agree. I guess I've been saying for some time now that the thing we need to be very wary of is sentiment, because a lot of the sentiment now is media driven, and the media focuses on the macro, which is designed to scare the hell out of us doing anything in actual fact, but just to keep our eyeball glued to the nightly news. So there's some real danger in that perception thing. But if we come back to that, and 100% agree with you, diving into the micro level, which is happening on the local level, then we've got a much better chance of really understanding what's going and ignoring that noise, because if the demand supply exercises are speaking very clearly through data that everyone can get their hands on, then why overcomplicate it or need to go much beyond that?
And you can also disprove things that are really interesting, Bushy. I didn't mean to cut you off. This came to my mind. It's like, traditional folklore would suggest that if a area has high incomes and has always had high incomes, that's where the most property price growth occurs in the future. It's very interesting that the actual opposite exists, that those areas that haven't had high growth but are experiencing high growth in incomes now, I'm talking incomes, that is where price growth outperforms over the long term. So it's like, it's not the absolute level of data that matters, but rather trends. That is kind of where the secret sauce is.
Absolutely. It's changes that we're looking for, not what's
Correct.
happening here and now. And that's the danger, I think. I'd love your thoughts on this as well, but I get very frustrated with a lot of commentators who talk about property markets, which in my view don't exist, because every property in every street and every area is different from the other. There's no apples for apples comparisons. And then there's a total reliance on median prices, which again, don't tell the true story. Because if you've got a quality property in a quality location, the median price means nothing.
Yeah.
So what's your read of all of that?
Yeah, I mean, I kind of hit the nail on the head. I'll just take an example of like where I live. Here, this is a place called Sorrento in the Gold Coast, and there are almost like three markets within this suburb. There are properties on the waterfront, on the canal, and then there are properties on like more the main road area, and then there are properties that aren't on the main road but aren't on the canal either. And you found that even despite Gold Coast property prices dropping, property in general going down a lot in Australia, like let's be honest, these waterfront properties have actually gone up. Believe it or not, I'm not even lying, right? The main road properties have gone down 25%, 25%, and the ones in the middle are somewhere in the middle. So it's like within the same suburb, you'd say, oh, PK, you're making stuff up. I can look up Bundall, I can look up Sorrento, and I can tell you that the median has gone down. But it's like, hey, if I was to sell my house today, I'd get more than a year ago.
Absolutely, and this is the big miss, I think, and again, I think a lot of property players, because they focus on these medium average levels and not focus on quality, because quality always outperforms, and as long as you know what quality is when it comes to property, and then you can create your own economy within property by just focusing on property, regardless of what's happening with market movements. If you're making sure that it's an investment grade property with owner occupier appeal, so that you're making sure that you're appealing to the broad buyer market, then those properties are always going to do well. And there's plenty of evidence of that. I mean, from the sinking values perspective, I've been expecting it because, again, I'm a bit old and crusty, PK, but every time we see a rapid rise, particularly on a broad scale like we did post-COVID, then it's normal for prices to soften. Yeah. But the really challenging part now, particularly for investors who got excited around the FOMO and the hoo-ha that was talked about property in the good times 12 months ago, is that unless they're focusing on that really A-grade quality property that's had the data-led growth drivers that are supporting it, a lot of property in a lot of areas are going to go down and then flatline for an extensive period of time. So that quality focus is more important now than it's ever been, although it's always been important, I believe. I'd love now to shift into, because you've developed your property investment accelerator course. Talk to us a bit more about what that's about, why you created it, what are some of the key messages that come out of it, and who's best suited to take advantage of that.
Yeah, sure. And I'd probably preface this with saying that before considering any course, like people need to be utilizing the free education available to them through diverse mediums and diverse people that put content out there. Like that's the first thing. Not everyone needs a course. But in terms of the property investment accelerator course, I saw that there was really nothing in the market that was completely independent, that didn't have any upsell, or you want coaching, that's an extra 3,000. You want the tools, that's an extra 2,000. Or by the way, here's a house and land package I prepared. Like just education for education's sake. There was nothing in Australia like that, without some sort of conflict of interest or innuendo. The people that it's for, I mean, I can just tell you who my typical client is. They're sort of in mostly Sydney or Melbourne. They are kind of priced out, right? So they're like, okay, we do want to become property investors, but do we really want to pay $800,000 for somewhere past Penrith that's going to be 3%, 4% yield? No. So they want to be interstate. When it comes to interstate, they're like, okay, I kind of know Sydney and kind of know Melbourne because I've lived there for a number of years, but I don't know Perth, I don't know Brisbane, I don't know Adelaide, I don't know regional Australia at all. And I don't want someone telling me where to invest. Like that is like critical. My clients do not want me to say, by the way, don't ask questions. Here's the contract. Trust me, sign on the dotted line. That is not what they want. Rather, they're the 10% of people. They actually are thinkers. They want to learn how to think. They want to make their own conclusions. the right strategy, for them, the right suburb, the right property, how to negotiate, how to get it perhaps a little bit under market value, sharp price, how to do all of that without catching a flight, through local property managers, people on your team that are working for you, not against you, for free. That's really important. And they want to do this sustainably. They want to build a skill and have a mentor at the ready on demand so that they can rinse and repeat. Because none of my clients are like, yeah, I'd be happy with one property. No, they're ambitious. Like they want to, it's not like they want to buy a Lamborghini, but like they just want to build a portfolio so they can effectively just get a comfortable living, right? Like just transition from active income to passive income. That's kind of it in a nutshell. I mean, I can go into the tools and the methodology and the videos and the community, but at the end of the day, like it gets the job done, and that's who it gets the job done for.
Well, you're rather than giving someone a fish, you're teaching someone how to fish so they can feed
Exactly.
themselves forever, which is perfect. And I guess sort of leveraging off that in the context of what we've been talking about today, what is, in your opinion, the best way for DIY investors to develop their own strategy, buy interstate, buy good value properties, and be able to negotiate a property purchase? Can you talk us through that and perhaps give us an example or two?
Sure, I'll give you like a really, I always use this example, so people probably heard this one before if they follow me, but I had this client in 2000 and I think 19 or 20. His name's Bennett. He was a new migrant into Australia, literally only been here 2 years, lived in Melbourne, and he wanted to naturally do all of the above mentioned things. So using the tools and the methodology that we provide, he built his own strategy. Now, his strategy is different from my strategy, different to your strategy, different incomes, different serviceability, risk profile. He didn't want to be active. I'm happy to be active. He didn't want to be active. He wanted completely passive. So he built his own strategy. And the thing is, Bushy, that it's not like he just put down a few bullet points on a piece of paper. That's my strategy. Like he actually used the financial models that we provide and built out a cohesive strategy. Okay, number of properties, the frequency, this is the serviceability, this is how I can do it. It's not like just arbitrary 10 properties in 10 years. He worked with an accountant and mortgage broker to do that, and he was confident this is the foundation. He identified a suburb called Pacific Pines in the Gold Coast using the data methodology that we teach, and we give all the data. It's not my data, but we teach them how to use it. And Pacific Pines in 2020, this is in the Gold Coast. And so he selected the suburb completely remotely, confidence in the data. Then he used data plus local property managers that we gave him to find the right pockets, the right street in Pacific Pines, and he's just built a relationship. Now he has an accent, like he's not like a true blue Aussie or anything like that. He has an accent, but he kind of overcame that shyness, and just, over a course of 3 weeks, every Monday, 10 minutes, he built a relationship with a few agents. And one time this agent called him on a Wednesday and she said, look, there's this couple who live in this property. They want to sell it because they're having some issues domestically. They don't want it to be public. It's kind of embarrassing for them. This property is yours if you want it, right? And of course, off-market deals are always a little bit smelly. They're too good to be true. What's up with it? But this just happened to be one of those deals where he got the property manager and nothing was wrong with it. Stacked up from a data perspective. He did his valuation, and because they were motivated sellers, he got it at a sharp price. It was valued at high 500s. He got it for mid 500s.
Awesome.
And that thing has gone up. I mean, everyone knows, how much it's gone up in Gold Coast. It's like worth 800 something now. And like what I'm really proud of is that this was a guy, Bennett, that knew nothing about property before, but he was willing to go outside his comfort zone. He was willing to pick up the phone. He was willing to trust data, and he back tested it to make sure that it was legit. He was willing to lean on the team around him, like conveyancers, like building and pest inspector. I mean, he didn't catch a flight up to the Gold Coast. He was, the building and pest inspector, the property manager did all the due diligence for him. And like, it's just happy days since then. So like that's kind of what we do. And I think I should also make this point that anyone can do this. Like, you don't actually need to do my course. You definitely don't need a buyer's agent, but anyone can do this. If you have the wherewithal with data, You can pick up the phone, talk to local property managers. You can buy anywhere around Australia, high growth, high yield properties. But to take your analogy just one step further, the fishing, I find that some people, you give them all the tools, all the knowledge, they have that fishing rod, they've hooked the fish and they're reeling it in, but it's just like a really big fish. Sometimes they just need an extra pair of hands like on that fishing rod to help, pull it in. And that helps them with the confidence, just that extra assurance that they're doing the right thing. And then you just kind of get that fish over on top of like the platform that you're on, the jetty or whatever, then you can let go of the fishing rod and they're like, I did this myself. And that's a really cool feeling.
Love it, love it. We've touched on this subject a little bit, and what I love about what you've just shared there, it's definitely important to have good independent professionals who don't have a vested interest, like the property manager, like the building inspector, like a good mortgage broker who can help you with capacity, like a good accountant who can help you with entities and all the rest of it. The outlier here, to some degree, that we've spoken about a little bit is the buyer's agents. Talk to us about your thoughts on buyer's agents in a bit more detail, and other property professionals as far as an investor's needs are concerned.
Sure. And once again, I'll preface this, I have nothing against buyer's agents. And actually, I think we've produced more than 75 buyer's agents through the course as well. People who didn't want to be buyer's agents, but just fell in love with property, became buyer's agents. So I have a tremendous amount of respect for good buyer's agents. But like I said before, I feel that most aren't good. And even if they are good, they're a bit like gardeners. So let's take that analogy. If you have a garden, we talked gardening before we hit record, and I was spending the morning doing gardening. To do gardening, you do need to put in some time, right? The best fertilizer is the gardener's shadow. So you need to put in a bit of time. And you also need the right tools, right? You need like the whipper snipper, you need the lawnmower, some gloves, some tools and stuff. Now, the thing that people kind of get into this trap of is thinking, I don't have the tools and I don't have the time. The reality is that you might think doing gardening takes a lot of time, but if you have a bit of knowledge, you can expedite it. Okay, so you don't need to take trial and error and plant the wrong flower only to realize that you planted it in the wrong season or in the wrong location. You can just go on YouTube. Not that I'm saying properties like this exactly, but you can go on YouTube and say when to plant this flower. Okay, how much shade does it need? How much sun? Just with a bit of knowledge, you don't have to do the trial and error. You can get it perfect every time. And with the tools, I mean, we're not living in the 60s, we're not living in the 70s, this is 2023. All the data is online. People will tell you they have their proprietary data, that their data is somehow magical. Guys, it all ultimately comes from domain, core logic, and ABS. Like, let's be honest. Okay, you can package it up and pivot it in whatever way you want, but it all comes from the same providers, and it costs them millions of dollars to maintain. So no one else is doing that as a private enterprise. So the data, go down to Bunnings, get your tools. All right, just hop on those websites, get the tools. Same analogy. And in terms of time, all right, property investors who know what they're doing through education take about 3 to 5 hours a week over 1 or 2 months to buy a property. Now, if you don't have that, like if you don't have 5 hours a week, 3 to 5 over a couple of months, sure, pick up the phone, get Jim's mowing or get a gardener to come out and help you. But if you do have that time, you can do it yourself. And the thing is that buyer's agents, the argument, right, is that they're professionals. Bushy, would you do a kidney transplant by yourself, or would you get a surgeon to do that? Would you get a root canal done yourself, or would you get a dentist to do? 100% of people go to the dentist, 100% of people go to surgeons. More than 95% of people don't use a buyer's agent. So yes, they're professionals, but a different type of professional, a more discretionary, nice to have professional, not a professional in the sense that to change in the wiring in this house, I'm definitely going to use an electrician. They're not electricians, they're not dentists, they're not surgeons. All right, they're gardeners. Gardeners are also professionals, guys. Let's not diss gardeners. They're respectable people, but they're not necessary. And that's my philosophy. They're not necessary. The reason people use them more often than not is because all the content in Australia is consumed or like dominated by buyer's agents. They tell you if you don't use them, you're going to make mistakes. And I'm not a big fan of that fear mongering. I've, in my experience, genuinely found that with the right tools, with a dollop of education, and just with that right amount of time, you can do it yourself.
Yeah, 100% agree. And I'm an advocate of buyer's agents for the right purpose and the right one. And it's like anything. If you're going to use a professional, use a good professional, because there's some pretty average professionals out there. And unfortunately, the buyer's agency industry, because of the way they get paid, there's a subconscious pressure for them to get you to buy a property quickly, because if you don't, then they don't get paid. So I think there's some structural issues actually with the whole buyer's agency framework that gets in the way of good situations. And certainly if you don't have time and you aren't able to invest in your own knowledge, do the due diligence to make sure you get a good buyer's agent. But if you're going to be serious about treating your portfolio as a business, which we've both touched on, then you need to invest in your knowledge. And once you've invested in that knowledge, and you don't need that person to do the running around, because you can do it yourself. Now, I love your thoughts on that. But I want to shift now into a bit of your read of what you're seeing with property conditions at the moment, and because there's a lot of talk in various forums at the moment. Should I buy now or wait? And what and where are the best opportunities? Can you give us your read of that? And I'll preface this by saying we're not giving any advice here,
Sure.
because everyone's situation is different and everyone's needs are different. But I'd love you to sort of balance the equation, because there's still a lot of fear out there in the marketplace, and a bit of if we use a bushy Buffettism, it's times like these that often the best opportunities arise, because everyone's scared and paralyzed and sitting like a rabbit in front of the spotlights. What's your read of the current scenario?
So I think people like me who have something to sell always say it's a good time to buy, right? We're incentivized to say that. I like to think about it in a more nuanced way. I think there's always locations in Australia that are worth not buying in, and that there are always locations in Australia that are worth buying in. There's buying windows. You're either in it or you're not. It's quite simple. So I think the whole property landscape, like you alluded to earlier, Bushy, like very accurately, we've just had like record price growth. That's unsustainable. It doesn't happen forever. The average boom in Australia, if you look at 70 years of history, goes for about 2 to 4 years. We started at the end of 2020. It was still growing like last year, let's be honest. So it kind of went for about 2 years. So, just 2.5 years. Then there has to be a dip. There has to be some sort of correction. That's perfectly normal. Nothing to freak out about. At the same time, that is the macro Australian property market's trajectory. Within the micro, if you talked about a property boom at the start of 2021 in Sydney, people in Perth would have been like, what boom? Like, what are you guys talking about? There's no boom over here, right? So the whole point is that there's different cycles for every market. Every city, every suburb has its own cycle. And so the whole point is that, yes, we should be afraid of investing if we don't know what we're doing. If you are just following someone blindly, or if you're like, your friends made money in the boom, and over the last 2 years, you're like, FOMO, I've missed out. I'm just going to buy anything. Please don't do that. Please keep your money in your own pocket. But if you actually know what you're doing, it's always a good time to buy. And I've very open about the areas that we're buying in, like pockets of Townsville, pockets of Perth, especially North Perth. It's really, really attractive. And one really cool point that you made earlier, around markets within a suburb, the medians can be misleading. You need to buy, especially in these times, properties that will last the test of time, that the own occupier appeal will always be there. You don't need to be a waterfront property. Even if it's a 400k suburb, buy in the best area within that 400k suburb, because the locals, the demographic that loves that suburb, they're going to love the best suburb, the best pockets of that suburb all the time. The bottom areas, or the worst areas in that suburb, those are the ones that tank. So there's still opportunities in parts of South Australia. In fact, North Adelaide, not that I'm a big fan of Elizabeth or surrounds by any stretch of the imagination, but that's still growing, and you wouldn't know it if you had just been media Sydney, Melbourne centric in your consumption of content. So, look, I don't think there's anything to freak out about. I'm a big believer of timing the market and time in the market. I think both are important. So to try to catch a falling knife in Sydney, may not be the best strategy. But even in Sydney, there's areas that aren't really falling right now. So yeah, it behooves everyone to get some education and ask ourselves better questions than is it a good time to buy right now, but rather where and how.
Yeah, and what?
And
Exactly right.
what? Yeah.
A combination of all of those. Now, I love that. That's a great response. Thanks, mate. Because it's if you think borderless, and because every area is going through different elements of the cycle, and they're all out of sync with each other generally, then there's a world of opportunity out there because, as you know, there's over 15,000 different suburbs and nearly 11 million properties in the country. So if you know where to look and you know what you're looking for within the confines of what your capacity is, and most importantly, your affordability. One of the elements that I'd say a lot of investors ignore or put very cursory input into is what's the actual cash flow affordability of this property going to be when every cost involved in buying and holding is concerned. I'm sure you do this, but some of the work that we do when we're helping investors, we actually get right down to tin tacks to work out how much per week in year 1, 3, 5, 10, 15, beyond this property is actually going to cost or put in your pocket, so that there's no secrets or surprises, and they're comfortable that it is going to be affordable to hold. Because if you're holding a property for 10, 15 or more years, and your life changes to the point where suddenly you can't afford it and you have to fire sale a property, you've just shipwrecked your whole strategy. So all of those elements are important, mate. We could talk about this for hours, and we will at a later point. I'm pretty keen to keep the conversation going, because the more I talk to you, the more I know we're on the same page in relation to the quality information that people need to hear. But mate, I'm going to jump into what I affectionately refer to as the bushfire lightning round, or the ambush round, which are the old podcast fast forward questions that you always get with a cigarette and a blindfold to answer. And the time starts now. So you mentioned a couple already, but what's your favourite quote and why?
I think it's happiness unshared can scarcely be called happiness. And I think that is by Charlotte Bronte, if I'm not mistaken. And I completely agree with it. The why is, I've experienced it. Yeah, happiness own a mansion by yourself. Who wants to live that? You need people to share your happiness with.
Love it. So that's I haven't actually heard that one, so that is a cracker. Shifting into a literary field for a minute, what's the top book that you'd recommend we read and why?
The top book is, there's so many books. Recently, I read this one by Jay Shetty. He's actually a friend of mine from many, many years ago. We went to a monastery together. That's another story. But it's Think Like a Monk. Think Like a Monk. So the reason for that is he talks about how in our mind, we should think like an entrepreneur, but in our heart, we should act like a saint, like Mother Teresa or something like. So this kind of confluence of two worlds is really interesting to me.
Love it. That's brilliant. I haven't read that one either, so I'm going to make sure I do. Switching back into the investment sphere for a minute, what's both the worst and the best piece of investment advice that you've ever received today?
The best piece of investment advice is buy property. I'll keep it simple. I followed it. It worked. And the worst piece of investment advice is buy property.
Two-edged sword. Exactly right.
It's like, that's my answer. I won't elaborate further.
No, I think in the context of everything we talked about, that's pretty self-evident what that means. So thanks for bringing that back into our foresight. Mate, final question. What's a personal happy habit, rewarding ritual, or daily discipline that you employ that you think's contributed most to your investment success today?
I meditate every day in the morning. I try to do it for 90 minutes, if not longer. It's not perfect. Mind goes crazy. But meditation, I've been doing that since I was like in high school, and more seriously since university, and it's changed my life. I think meditation gets all the credit to any small things that I've achieved.
Love it. That sort of self-reflection without reflecting to some degree. It's amazing what comes out of that.
Just
exercise.
Being non-judgmental, just not beating yourself up, not beating others up, just observing your thoughts for what they are.
Love it. Love it. Mate, really enjoyed our conversation. I'm pretty excited about doing more of this. But if we were to summarize our conversation today, what are the key takeaways that investors should take away from what we've talked about?
I think from a finance or wealth perspective, no one cares about your money as much as you do, your future as much as you do. And, really the best investment, the best real estate that you can invest in is the 6 inches between your two ears. I really, really, really firmly believe that. Be in that top 10%, the people who actually think, have the right team around you, but question everything, question them, question yourself. Enjoy the journey. It's not about financial independence. It's like concept. It was never about financial independence. Financial happiness is not the goal of life. It helps, but it's not the goal of life. And what else did we talk about? I think, the process of buying data, like I kind of trip myself up because on one hand I espouse all these spiritual things, but at the end of the day, where the rubber hits the road, it's all about data. It doesn't matter how spiritual you are, how great your marketing budget is. Data is cold, objective, hard fact, and that is what makes you rich, not anything else.
Love it. Love that. It removes our perceptions and our own judgments that we apply to things. And if it's cold hard facts and you're looking at them over time, so you can read the trends, that's where the magic sits. Love that, mate. And sort of bringing it to a close, what's new and next for you?
I kind of gave that piece of advice to myself when I was younger. I'm actually looking to just connect with more amazing people, genuinely speaking, like sincerely, like you, Bushy. There's so many investors in Australia and just not investors as well that they have stories to tell, and we can learn from their stories, and they're remarkable, inspirational people. So I think this next chapter of my life is just connecting with as many people as I can to absorb that knowledge.
So look, PK, I really appreciate your very generous time today. I am seriously looking forward to continuing the conversation, and appreciate you joining us to share your wealth of wisdom.
I'm very grateful. It's my honor. Thank you so much, Bushy.
Thanks, PK.